Hello and welcome to Stocks Advisors channel. Again, in today's episodes, we will talk about two companies simultaneously. It's BlackBerry and Amazon. And the reason for that is because recently we saw a huge price action for BlackBerry, and this was related to news and agreements with Amazon. So we will compare behavior of BlackBerry and Amazon on that news and what's the future for both and what would be the trading strategies. So first we will start from BlackBerry. And the reason for the news and for this spike we see these days, actually it's trading really well. It started overall upwards move somewhere in actually beginning of November. We see almost linear growth, neglecting volatilities during the days. Very nice growth, and then suddenly we saw increase from the level of about 6 to almost 970 plus, which is incredible growth for a company of 4 billion market capacity. So in that sense, it's really remarkable. And the reason for this is the news, and the news are actually the fact that BlackBerry is going to work on Amazon's cloud computing company with Amazon's cloud computing company and web services AWS on an intelligent vehicle data platform. And of course, for BlackBerry as a company, it's a huge, let's say, news. It's a huge advantage, and therefore the price did grow and it did make this big, actually, jump. But now the question is, where is it going to go for us as a traders, especially as a technical traders? That's what we do at our channel. So as a technical traders, what can we expect from this move and how we need to understand this news? Is it good, bad, or actually how to read it? Of course, the news itself is very good. And we need to remember that with every news and after news action, there is always a thing that the news should work itself. Work itself out, meaning that if there is a news between company A and B, for example, that something good will happen, it causes immediate price going high. So this is like a news effect. But then the news itself did not work yet, so that profits that were expected and that are lying in this price jump, they are still not made. So this should be made, and until they are made, it will require some time, some money, some activities. And of course, then what happens before this is really done, the traders, and especially those who did really play just on the news, so who really overshoot the price up, they start leaving and the price start decline, because still the news should work itself out. And then you have a smaller decline, not really the dip, but a decline. And only then, when the news works itself out, it's reported then in some quarter reports, etc., fundamentals, then it returns. So this is a classical behavior for a good solid news. It's a reaction after reaction and real effect of the news. This is the third part. So this is reaction, it's actually after reaction, so when the news is working out itself and when the news is done, and this is the third part. And if there is of course another news coming in between, another positive catalyst, then you have another jump here, etc., and then if you do accumulations of these jumps, actually your effective price can go really like this. But you need to remember that this is really like just pumping by news. This effect is well known for traders, and still we don't know would this happen for BlackBerry or not. If this would happen, of course, we might go another spike. But for the moment, what is done, we have made phase 1, and we are now preparing to make phase 2 here. So it was already a very nice growth from the November, from the level of 450 to the level of 6. And then also with these news together, actually we see these jumps. So the news should work themselves. And this would mean that most probably the price will decline until the news works out. And if you are willing to trade here, you can enter on this decline. And then when the news is done, actually you will go high again. And this is more like, let's say, more midterm play here, because you also need to understand that before the news, the price also did rise, and there is a very strong level, for example, was here observed, exactly playing here like a white-red also candle combination, and corresponding to previous maximum, so S1 level. And this is the last support, because after that we have only volatilities. Most probably we will have this part as a V shape. This is also confirming by these 2 free phases on this diagram we just discussed. So if you would like really to play here on this let's say situation, it would be advised just to wait and enter. Maybe let's look the levels where we can enter. So first we look for the downwards for lower support lines. So these would be actually these levels. Let's first draw them. So it's one here, and then one is sitting right here. Again, not at all we go these levels, but as always, as we do our channel, we discuss all visible levels. So S2, S3 line, and then let's look here. So here we have not support lines, because you cannot classically call them support, but some volatility levels. And of course, you see that actually this is the opening of the news. So this is one volatility level. And then, of course, this red-white is another volatility level. And then you can say somewhere in the middle, although it's not really the volatility level, but let's redraw it. But that could be used as kind of an anchoring point here from general considerations. Let's draw it blue. So what can we expect here? So let's name these lines V1, V2, and V3. And the price is expected, of course, to a little bit decline. We see it's decelerating here. We have this smaller doji. Yesterday it was huge, kind of a doji candle. Yeah, it's still intraday, because it could go either way. You see it's red, yellow. But in general, if you would like to play on these, let's say it would be advised to wait for a spike if it comes somewhere, let's say, below V1, V2. And let's say in V1, V2 spike, actually more safe would be from the middle V1, V2 to the middle of V2, V3. This would be the first entry opportunity here, just to catch this so-called V shape. And then should the price decline any further, then anything between S2, S1 would be another very strong buy. And again, not given we go there, but still, as I said, the news should work itself, so it might be even further decline. Just as always, we do very safe approach. Let's have some funds here to average down again. And it's advised to buy with 1-2 approach, meaning the funds you would like to play here, you split in 5. Then you buy with 1 portion, average down with 2 portions, and again average down with 2 portions, according to the situation presented here. This way you will have the best, let's say, profit versus risks of loss optimization. But most probably we will do this V shape first, somewhere from middle of V1, V2, and V2, V3. So this is BlackBerry. Now let's look how Amazon did react on this news. What's happening with Amazon now? Well, what do you think? Of course, it's no reaction, almost no reaction. You can see if you just continue this line, the timeline, yeah, you see, well, there is it just caused some volatility here, some maybe increased spiking, but not much happened. Let's draw it therefore very thin. And the reason for this is, well, its size, of course. Yeah, you cannot compare a company of 4 billion versus the company of 1.6 trillion because the daily volatility of Amazon is bigger than the BlackBerry itself. Therefore, actually, it means nothing for the price action of Amazon, and therefore, really nothing did change here. So for Amazon, we don't see any change, and therefore, we can say this news is not affecting it. Well, it does. Some small portion, of course, is there, but in general, it doesn't. So we can do for Amazon just a general analysis here. And what's the general analysis for this moment? What do we see? We indeed see that, first of all, we have here again 3 moving averages depicted. It's moving average 20, 50, and 200, being green, blue, and red lines correspondingly. Here on the left, you see their legends. And what do we see then? The moving average 200, the red line, it is going with kind of a deceleration momentarily, so it's still pointing up, but it's trying to bend, and this means that second derivative is now negative, so we have some deceleration in price action. But the longer term moving averages are not that important here. The most important is what do we see from the trading channel that is formed already, and from that we can see next. So we have let's say the upwards trading channel here, which was not even penetrated before, and then we have a lower trading channel here like this, and between them is another one you can see forming. It's actually this one. So these are three major lines that are playing here for Amazon. We can call them R1, R2, and R3. And actually, the latter price action is playing between R1, R3, going up and down between those lines, volatiling here and there. And now it's just in the middle. So for Amazon, speaking simply, the best advice would be just wait until we reach R3, and then you can do your first entry here. And then just to play the rebounds all the way towards actually R1. Also keep in mind that there is also middle of this chart where we always have these volatilities and jumps. We are sitting on it now. It's clear visible this line. And of course, we can call it V1 level actually. So if we start piercing it further, well, then we could go to R1, but in general, most probably it will narrow down and then we will go another spike. Should the price continue falling down, of course, we need to, let's say, think of some possible further support levels and buys. And therefore, if you look at those, this would be the next support level here. And there is another one. Now visible, yeah, it's this one. And of course, there is this one line as well. Not at all we go that low for the moment, but just to keep it in mind. So if this should be then playing here, we can, let's name the lines. These would be S1, S2, and S3. Then it would be advised in this situation, just start entering again somewhere between S2, S3, to average down just immediately after S3, maybe a little bit S2, a little bit higher. And then should the price pierce further lower than R2, you can also buy between R2 and moving average 200, also would be a good average down. And here you can do a so-called 1-2 approach. So again, the same like for BlackBerry, you split your funds you want to play here in 5, you buy with 1 portion, then you average down with 2, and again with 2 according to the analysis presented here. This would also give you, let's say, the best optimization for profit versus possible losses, and might take from 1 week to several weeks. Of course, as you can see here, we always give from 1 to 5 weeks analysis with very deep supported defense. This way the profit is, well, almost guaranteed, but of course, since we keep some funds for average down, it might be not that big as if you just do casino style playing, putting all funds on one portfolio, but then it's also less risky. And this is most important because if you do several bad trades, you can actually lose in your portfolio almost half, and this is not the good way to do. So don't be trying to become rich from one trade. Always be technical, or whatever strategy you use. Actually try to get rich from your strategy. This means that you are really on the right way. If you're just trying to catch one trade, it means that you are just playing a casino called stocks trading. With this having said, that's all actually for Amazon and also for BlackBerry. Just to remind you, for BlackBerry, it's a huge action on the news between Amazon and BlackBerry. For Amazon, no reaction as would be expected, of course, for a company of 1.6 trillion market capacity. So with this having said, that's all. Again, if you're first time watching our videos, please don't forget to subscribe. Also press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.